All right, ladies and gentlemen, Watchlist speed run. We have Jerome Powell tomorrow. I'm going to go over that recap, both the dot plot and the statement, but I'm going to start off here with a lot of pretty pictures that are relevant to what's going on. Then we are going to talk about why we saw cracks in the market, and then we are going to go over Powell and the plays. Now, to start it off, I think this is a wild one because, quite simply, this is the first time in history that over 40% of banks have tightened credit standards, then went back to not tightening credit standards, and you have not had a recession. This has kind of been going around recently. Thought I would show you that, as well as this chart. It's a little bit old, but people are talking about this. You literally have the most amount of consumers, or the highest share of consumers, expecting that stock prices are going to rise over the next 12 months. Literally the most bullish people have been ever, according to the surveys. And now this one is something we were talking about the other day, but it starts to expand a little bit. I was showing you guys the amount of value stocks, the consecutive sell-off. It was one of the worst in history. And now the Dow, 9 straight days. It is the longest losing streak in almost half of a century. And this one, I think this next chart I'm about to show you destroys a lot of narratives because nobody has really talked about this. And if we're really worried about inflation, something that really responded to inflation, it also had one of its biggest down streaks from the beginning of the year and is starting to bottom out, and this chart is lumber. So I thought that was very interesting. And then the market breadth and those concerns, those are still apparent. And what this is showing you, the amount of stocks trading above their 200-day moving average, it's getting lower. If you look at the 50 and 100-day, it is just showing that you have a lot of stocks declining. And remember, this is what we were saying yesterday, comparing it to 9/11. Well, people wanted to go even further back, and instead of using the advancing declining ratio, if you just looked at the number of successive days that the S&P has declined, just the pure amount of decliners versus advancers, not like a ratio, you are at one of the most highest amounts ever on history, on record. So people have only been tracking this from like 1996, but fact is, I mean, we don't really have much going on, but we have really watched a gigantic value data dump in a lot of places. Even if you wanted to compare it like small caps to the S&P using the S&P 600 instead of the Russell, from peak to trough, this has still been one of the worst moves. So from Dow to value stocks to market breadth, you have a lot of things really falling off a cliff. Even then, tech today, we're going to talk about some of the cracks, but this chart is even showing you VIX versus VXN. VXN is for the tech stocks. Even volatility in tech stocks now starting to break out as we are seeing some other cracks in other areas. So we got a lot to talk about. I'm going to go over it when we discuss a little bit about today, but does this all mean that you panic? I mean, look at the index. You're right near all-time highs, but we are watching some very interesting moves. I think we even had the 3-month, 10-year or 30-year uninvert as well. That one took a little bit, but we have Jerome Powell tomorrow. There's a lot that we're expecting, but even though we've been playing this whole everything's good and we're waiting for things to happen, I mean, this last like 10, 11 days, underneath the surface, you have watched a lot of wild moves. So it's not December 2018. Maybe it'll be like February 2018. We'll see how that plays out. But now the only other things I got to show you, what is it? I think it's just a couple of price checks. Simply uranium. I thought this one was interesting. It's actually hitting a 13-month low, I believe. So although everybody's been hyped up on nuclear and all of this, I mean, the pure actual commodity has not been doing well. And then we talked about this one yesterday. Cocoa, it broke out. So new record high. And again, just even from October, this is actually wild. So lumber's going down. Cocoa's going up. I mean, do I think this is like broad inflation or domestic inflation? No, I think this is dollar, all the currencies and everything else. And it seems like place by place, it's more specific. So we're going to have a wild year next year. But that being said, now that is all the pretty pictures that I have. I hope you enjoy it. We did this the other day and even yesterday on the live watch list, and some of you liked it. So I really hope it helps. But like the video, do all that stuff. But now, run it, baby.
Working to the couch, it's the 2020 election. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Feel how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down.
So right off the bat, that only took 5 minutes. We are in a speed run. like I've been saying here, we have a couple of cracks that have shown up today in this exceptionalism trade. Remember, we've been saying the market has been benefiting. Well, the last couple of days and weeks, Europe and the other places haven't been doing good. The dollar keeps getting stronger, and now finally we are continuing that downside, and you saw a more broader sell-off today and people getting a little bit more worried. Now, what is the whole deal with it? Why is this happening? I just think it's the effect of the dollar, like we've been saying, right? When the bond yields, they kind of overshot, and now that pressure, once they go to 4 or 5 again, everybody starts getting worried about 5 and 6. That's slowing things down. The rest of the world has been having a lot of problems, again, especially in Europe. But think about it. We've been saying by the earnings, some of these companies are going to start complaining about the strong dollar on Forex, and just take a look. Value selling off. That has been a big part of it. And a lot of these value names are multinational corporations. They make money from overseas. I just think it's getting kind of ridiculous how strong the dollar is. And now it's kind of hard to fight, especially with the bond yield. So I don't think it kills you, but you've had that. You even have healthcare. A lot of people are forgetting that even the value index is comprised of a lot of healthcare right after banks. So healthcare and the whole like RFK thing, and then getting worried about the food, and then now moving it from the food to the insurance companies yesterday with Trump's comments. That's kind of what's been contributing to all of this. But the fact of the matter is, you have finally been having the dollar slow things down. You're getting a little bit of a slowdown, but reality, the big story, it's just that market breadth. And the fact is, everything is still good. About 75% of the market is trading below certain levels. That breadth is terrible. It's either you're going to watch that recover after Powell and towards the beginning of the year, or again, by inauguration, this just absolutely gets worse. And then that strong dollar starts to backfire, and then we see what the other trades do. So go watch yesterday's watch list. I think you could get a lot from it, even from the beginning. I know it's a long one, but the first like 5-10 minutes, that should explain a lot of it. But that's key number 1. So now 2, let's talk about Powell tomorrow. Like I've been telling you, I'm expecting a hawkish cut. What does this mean? You are almost guaranteed a rate cut tomorrow, and the dot plot is going to show either less cuts than before or the same amount. There is a scenario where I believe the dot plot stays exactly the same, and then he tries to be hawkish on the press conference. But as of lately, it's very hard for Powell to sound hawkish. If anything, hawkishness shows up better on the dot plot, so it's just easier to make a slight adjustment to that. He keeps the same speech, and then the bond market is already expecting this. So this is the deal. Shout out to Raj, baby. He had a good theory, and he was talking about how ever since the last cuts, the first cuts, the market has rejected it. It could almost be saying policy error, and I agree with that, but he was saying maybe Powell doesn't cut tomorrow. Nah, man, no one wants to ruin the election or the holidays, and the fact of the matter is, the Fed futures have like a 65-year history. As long as the short-term Fed future bonds are pricing it in tomorrow, Powell and the Fed usually don't like to upset people. If he does, we'll get volatility. I'll be there live, baby. We'll be live during Powell, but more likely than not, they're going to cut rates, and that's why everything else, we're expecting nothing really juicy from the dot plot. If anything, it'll show less rate cuts than before, and that's what's going to make it hawkish. And the thing about all of this that you've really got to keep in mind is that it's all priced in. So this is my idea. A lot of other people on Wall Street have it, but the bond market is literally saying this. The bond market is already pricing in 2 cuts for 2025 instead of the 3 that is shown on the last dot plot. So that's why this is all kind of expected. If Powell really wants to ruin the holidays, we will see. But now moving into the actual analysis of the dot plot and the statement, I'm going to show you the statement here in a second, but these are the words and phrases you got to watch tomorrow on the statement. The beauty about tomorrow is that we get a dot plot and summary of economic projections. So that means right at 2 p.m. when this comes out with the statement, you're going to get that big piece of information, which is going to probably display the hawkishness. Now, besides the dot plot, when you do look at the statement, here are 5 little lines that you got to look for. In the first paragraph, I'll show you, they talk about economic activity. and they said continued to expand. Watch if this changes, as they say it stopped continuing, it's leveling out, or maybe they remove continued, or they change the word expand. That could insinuate more or less hawkish. The next thing, there's another line, they're going to say conditions in the labor market generally eased. Are they going to say, again, that it is getting worse again, it's tightening, or they're going to use a different word than generally? Again, this could display hawkishness or dovishness. And then as far as unemployment, the last time they said unemployment rate moved up but is low. See if there's a change in this. It shouldn't change, but if it did, this could give you more insight beyond the dot plot into how the Fed is thinking. And then the other line says inflation has made progress. Remember, everyone's worried about inflation with the tariffs. Well, if they're really worried and they really want, this is the line that they could really get hawkish on, because they could just say inflation has stalled. And that right there is going to exude, I don't know if that's the right word, a lot of hawkishness. So watch out for that. And then finally, economic outlook is uncertain. They shouldn't say that it's certain, or they might say it got more uncertain, and they could talk about that, or even throw in a line of tariffs. I wouldn't be surprised. You may even get a political line in there. That's what I would be on the lookout for. So like I'm saying, right when this all comes out, you go to the Fed website. This is the statement. So continued to expand, that's going to be right here. So when the new one comes out, look around here. Again, labor market conditions have generally eased and unemployment rate moved up but remains low. Watch if this line changes. Again, inflation has made progress. See the tweaks. And then I think it's right here. Economic outlook is uncertain. They're going to say the balance thing. If that changes, that'd be wild, but I doubt it. That's their optionality, but you never know. They might do that. So that's the statement analysis. And now the next thing, the dot plot. So right when the dot plot comes out, I mean, if you literally want the dot plot, you scroll a couple pages down. This is the dot plot. I personally think the dot plot is easier to read in numbers, so I didn't do good on the ACT chart section as much, but at the end of the day, this is going to tell you end of the year. Nobody really cares about this. I mean, even then, look, in June, the Fed was saying that rates would be at 5.1, and then by last meeting, they said 4.4, and I think we're at like 4.1 right now or something. Oh, man. Or that's where we're going to be at, but I think we're at 4.3. I have to double check, but ask the 10-year. But this is what you're going to look for, 2025. And Fed funds projection rate, right, last time it was at 3.4. This should go to like 3.6. That's going to be one less rate cut. If it goes lower, that'd be bullish. And people might get really excited about that. But again, I doubt it. And even then, last time it did go lower, the bonds actually sold off. So see what they say about employment and the GDP. This could insinuate if you think the Fed knows something that we don't, that's why they're cutting when it doesn't make sense. Maybe it'll show up on this part, but generally we're expecting a slight tick up. If it goes much higher, then that could be a little bit different. Other than that, though, even if it stayed at 3.4, I think that would generally still be that 3 cuts and then Powell staying the same, and then he talks it home. But we shouldn't really get too much now. The final piece to the puzzle, if you go and look at the options market for tomorrow, it says 411. It's really like $4 flat. But this is pretty much pricing in a 0.6% move for the S&P, and you already moved like 0.4 today. So even if you make that up and go a little extra, I mean, it's going to be the same 1% that you just dropped from round trip. Now, last time, even the CPI, it surprised. There's a lot of pessimism in certain parts of the market. They've sold off 11, 12 days in a row. So if people like tomorrow, I mean, it could easily set us up for an overshoot to the upside, or at least the value name. So we'll see. Maybe the action, I think actually, no, for certain, I think there might be more action underneath the hood than the actual index. I think your values, go look at the value index and all of that. I think you might get bigger moves following Powell, not to mention gold and bonds and all of that good stuff. So that's all that we have. That is the simple breakdown. I really hope this helps you tomorrow. Let me know if you have any questions. And again, we will be there live tomorrow for all of it. But now, let us get into the plays. So, right off the bat, it's very simple. I got industries. Hopefully, the related plays, or even then, I've talked about specific plays on the past watch list. So I strongly encourage you to watch those if you want the full picture. You'll have time. Don't worry, you know what I'm saying? Don't worry. But biotechs in yesterday's watch list, go watch that live one. At the very least, go to the link of yesterday's live video, and there is a Google Docs link with a whole Catalyst calendar. And literally there was 5 biotechs yesterday. There was at least 5 today. And these are very, very ripe right now. I'm telling you, you only get this opportunity one time a year, the final days of fourth quarter, where all of these events converge. Second half 2024, fourth quarter 2024 are the same thing, and a lot of these biotechs have gave guidance for getting answers by this time. So literally every day we are watching those. I did make one play we'll go over in a second, but you let me know, feed me some info, we could go over it on stream, and we did that today. So y'all were using the watch list, we played back and forth, I loved it. So let me know if you have more, but I'm sure you're going to keep waking up to these all the way up until New Year's. But that is play number 1. Then play number 2, quantum, baby. I told you guys last week the quantum stocks are about to go crazy. I took the ghetto play with QS. Again, I bought the only quantum play that wasn't like even a quantum computing play. It just had quantum in the name. That's why I call it the ghetto play. But the hype remains. Qubits, IonQ, Rigetti, all of those just went crazy, and that's what I'm saying. The hype is there. These stocks are terrible fundamentally. I'm not going to talk any smack because I even tweeted, I'm like, man, back in the day, you mocked the stock, it went down. Nowadays, you say anything bad about it, it farts its way up to the moon, man. So I'm not playing with that. All I'm saying is that the hype remains. So I told you guys in advance, you're watching it play out. And now what I'd be looking for is the next cycle of quantum computing headlines. We're going to get pops and drops, and then we'll see after that next cycle, the next set of headlines. Some of them are going to keep going crazy. Some will lag. We'll see which ones offer, which ones can feed the hype with earnings, and then you go from there. But I'm sure we should be hearing about this coming into 2025. So good luck, be wise, and remember, the party don't last forever. So that is play number 2. And then finally, healthcare stocks, man. It might be too early, but, dude, I can't ignore this ratio compared to the SPY and NASDAQ advancing. And then you go look at XLV, it's like the worst sell-off in like, I think 20 or 16 years. So I like value. Hard to ignore. I mean, I don't know. Healthcare is not really popular right now, especially healthcare insurance companies. But, you know, the victims in this industry are shifting. And maybe that's a poor choice of words with everything going on. But what I mean by that is literally healthcare has been pummeled by a lot of things. And it was started even after the election with RFK, and people are like, oh, they're going to ban this, they're going to ban that, And then as of yesterday in those Trump comments, everyone's like, wait a minute, insurance companies. So maybe this, okay, RFK is going to play nice. And then now one after the next, but it just led to a terrible sell-off. But, you know, if you like value, that could be a really, really good one. So watch out for that. That is going to be play number 3. We'll see how that plays. And then as far as any other plays, Editas, this is my biotech gamble. Again, literally, some of you guys did great research, and I love it, man. And you used the videos, and that's why I was able to help you out. I forgot who it was, man. It was Jesse. Shout out to Jesse, baby. He pulled up Ionis. So he used the list yesterday. He gave me his theory. He talked about the drug and everything, and he got the catalyst is within a couple of days. And I showed him a couple of things, but the thing about it, there was one part of his email. He was talking about 2 standard deviations, support levels, and where he thinks it could go. And I said, your first part of like the drug catalyst play was perfect, but the other part, thinking that biotechs will respect levels or standard deviations, they're the epitome of doing the opposite. These events are all surprising and gambling. So I say that as you have to approach these biotechs with an abundance of caution. Even in this play, I have $300 on it. So we'll see where it takes us, but just remember, it's make or break it. I picture you either you double your money, sometimes less, and you get disappointed. I mean, go look at TNXP today. I said, man, maybe I sold out too early. That thing shot up 200% in the morning and then ended negative. So that also happens. You got to even be quick with it. Remember, this is just to play and use the catalyst. You know an event is going to happen. Do not fall in love with it. But also, too, you got to respect it, play it small, and just don't think, your technicals, levels. I mean, this is the world where anything could happen, and there's zero respect for it. So be cautious. But Editas, they have an event towards the end here. It's a cerebral palsy, I believe, and they had good data. They recently got a bunch of downgrades, and there's another reason why they sold off. So they were just trading at a couple bucks. It was trading a lot higher. So I think it's going to be make it or break. They only have these 2 palsy drugs, so we'll see where it takes us. But other than that, going to be watching the Fed tomorrow, and then we'll see where the value takes us, and then that's it, man. You coast into the end of the year, and we'll see if any other cracks form in any other parts of the market. But, Chad, I hope you enjoyed it. I hope you got something out of all of it, but That is your watch list, ladies and gentlemen. Make sure hydrate healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. I need you to remember, baby, you're a creator. That's it. You got to create. There's nothing less. The statue must come to life, my brother. You are not just a statue. You are man. You create. So let's go, baby. It's game time. But I hope you're ready. Drink that water. Stay hydrated, healthy. I'll see you in the morning. And or not.